All right, what is up, flippers? It's Marcel here. Here I am with the recap video about yesterday's Euro USD short trade, which ended up in almost 1 to 10 risk-reward ratio and with a nice amount of profit on this trade. So let me just break down everything starting from the 50-minute time frame, explaining the plan that I was waiting for yesterday, all the way down to the 1-minute time frame with the criteria and everything else. So beginning with the 50-minute time frame, we had a pretty nice and clear bearish order flow leading all the way down to demand level somewhere down here. So the original plan yesterday was to look for shorts. So basically we were looking for 50-minute/5-minute zone mitigations, 1-minute confirmation on those areas, adding up the criteria and entering in short positions, targeting the 4-hour demand or 50-minute liquid regions. So that's what I was planning to do yesterday. That's what I marked up in the markups. And basically I marked out two potential sell areas. The first sell area that I just marked out was up here. This was the extreme. This was a pretty strong supply region because it has swept liquidity beforehand and created a nice reversal and immediate inefficient push to the downside after a sweep of the liquidity, leaving a pretty huge volume behind. And the second area that I just marked out yesterday was this small candle right here, which equaled as a supply area, supply weak area on the 15-minute time frame. So these are the two areas that I marked out yesterday and highlighted. And basically the plan that I marked for you yesterday was to wait for a mitigation on this supply here and the confirmation. Or if price breaks above this supply, we will be able to take longs all the way up to this next supply region where we can look for extremely nice confirmed bearish trades. So basically the other thing that I wrote in the chart is that I'm not really expecting a short confirmation here on this smaller area because it's basically a medium probability area because it didn't really create that much of a volume, that much of an inefficiency. And basically price was just struggling in this region. It was just consolidating for so long, for so many 50-minute candles, it was just consolidating. But although I just marked out that this area has a possibility to give us a sell opportunity, and if it gives us a sell opportunity, then we can take it. But on the other hand, we had to keep it in our mind that this is a medium sell area, medium probability sell area. It had a high chance to be broken. All right, so let's just see what has happened here on the chart. Basically, I will switch to the 1-minute time frame and explain everything that has happened here. So this 50-minute area has been mitigated even before the session start. So at 8:30 p.m., sorry, not p.m., 8:30 a.m., 30 minutes before the London session open, price has already mitigated this area and swept the liquidity from above it. Because above this 15-minute zone, we had pretty nice amount of liquidity right here. This was actually a 15-minute liquidity. And this liquidity, let me just switch to the 15-minute time frame. This liquidity has been swept out by a 15-minute wick. Excuse me for these markups here, but you know, currently a New York session is going on, but I just wanted to make this recap video pretty quickly for you. So this liquidity that you can see here, and I highlighted it out, has been swept out by this wick, and price closed inside of this supply region. So even before London session has opened, price has already made its move because it swept out the liquidity, grabbed all of the orders, old orders, stop losses from above this region, and reversed to that downside nicely. And of course, on the third criteria for this trade, and I mean not really criteria, but third compliance for this trade, that price even closed inside of this supply region, right? So we had a pretty nicely set up 15-minute time frame. All we have to do is to look for criteria in the 1-minute time frame, look for the entry criteria, look for the criteria checklist to enter on anything. So first of all, I was looking for this 5-minute demand reaction here, because this 5-minute demand and the mitigation of this demand has already happened in London session. So the mitigation of this 5-minute less recent demand region, let me just switch to the 5-minute time frame, you will see it right there, that there was a 5-minute demand region here that has caused the less recent push that broke above the less recent structural high here and basically mitigated the 5-minute supply and caused the sweep of the liquidity. So this 5-minute demand has been mitigated before the session open. So I had basically two scenarios marked up for myself. First one is if price breaks above this supply and closes above this supply area, then we will be able to look for longs all the way up to this extreme supply here that I just marked out in the markups. And the second probable scenario that I marked out for myself is that if price flips this demand to the downside, we will be able to look for shorts, right? So basically, it's a pretty easy reaction-based two outcomes which you have to follow. If there's a break of this supply with the body closure, then we will be able to take longs. If there's a break of this demand then we will be able to take shorts. Basically, a pretty simple reactional based strategy. So what has happened first? Basically, after mitigation of this demand, prices change the character here to the upside. So character changing movement has happened after the demand mitigation, but there was no 50% mitigation of this demand. So there was a possibility of the buy trap. Actually, I wasn't planning to really open any position here on this demand because basically the mitigation of this demand and the entry opportunity has showed up before the London session open, 2 minutes before the London session open, and I only execute after the London session open, not before. So it has been already X'd out for me because I do not enter in position. I do not enter in positions before London session open, so I had to wait. But right after the session open, price just simply blew through this demand area, leaving a flip zone behind and leaving a pretty nice bearish short opportunity behind. So this was a flip to the downside. So as I explained, this whole long scenario, whole change of character to the upside was invalid for me because, you know, it has happened before the session open. I mean, even the mitigation of the demand, this demand has happened before the session open. It had a really high chance to become a buy trap because there was a really low percentage mitigation of this demand. So basically, I was waiting for either the deeper mitigation and the confirmation there or the breakthrough of this demand. These are the two possible scenarios that I was waiting for here at this exact moment. And the second one has happened where price just simply flipped the 5-minute demand. At this point, I was really sure about that price will come up to this extreme. There was actually no other supply that I could mark out because this had no inefficiency. This had no inefficiency. So the only region that you can mark out and you could possibly enter on was this single extreme supply that has left behind this huge volume and inefficient candle. So basically at this point, I just simply did settle limit order here on the full body. And the second reason I did settle limit order here is because, you know, we can ignore the, sorry, let me just adjust the stop loss size. So we can ignore these areas as lunchtime areas because these are not lunchtime areas anymore. As I explained it several times before, the pre-London session areas cannot be counted as lunchtime areas. Only the pre-New York areas are lunchtime areas. So pre-London areas can be trusted. You can open them. You can open positions on these areas. But if it would have been formed before a New York open, you wouldn't have been able to open a position here because that would have been counted as a lunchtime area. But this one right here is not a lunchtime area because pre-London areas are not lunchtime areas. So I just simply did settle limit order here on this area, and it tagged me in. I used, let me just check what was the stop loss size because I was targeting a liquidity, and I will be able to tell you the exact stop loss size that I used. Yeah, I used 2.5 with stop loss here. So let me just explain the criteria. Let me just explain the TP and everything else here, because basically it was a pretty clean and nice trade. So the first criteria that I used, of course, obviously was the higher time frame zone mitigation. This is the first base criteria. 50-minute zone has been mitigated. Second base criteria was the liquidation. You know, there was double taps above, I mean, not really above, but directly as a part of this supply, which has been swept out by this movement. So liquidation has happened by this movement. Third criteria was the inefficiency. Perfect inefficiency has been created here. Fourth criteria was the pro-trend, pro-order flow. You know, I just explained that on 50-minute time frame that price was in a really clear down order flow, bearish order flow. So that was the pro-order flow that we were following. Fifth criteria was obviously the flip right here. Sixth criteria was the 50% mitigation of the higher time frame region. Actually, price mitigated even above the zone. So of course, we can count this as a 50% mitigation because more than 50% of the area has been mitigated, even though with the liquidity sweep, it has swept from above the area. And seventh criteria was the V-shaped rejection. Price was coming up, sweeping out the liquidity, and V-shapedly reacting and reverse to the downside immediately. This was the seventh criteria. Eighth criteria that price wasn't coming from any unmitigated opposite-sided higher time frame zone at this region. Ninth criteria was a strong pro-corrective pullback because price was really correctively approaching these supply areas. Look at this corrective pullback. It's really a corrective pullback. Actually, there was no inefficiency at all. It's all efficient, really correctively approaching the supply. And as soon as the supply is approached, it's creating this huge downside inefficient movements. So that was the ninth criteria, strong pro corrective pullback. 10th criteria was the liquidity to target. And the 11 criteria was missing because there was no candle by liquidation for this area. This can be counted as a liquidity because this was equal candles next to each other, which is not liquidity. So this trade had 10 criteria. Let me just show you the liquidity to target. Here was perfect double balance on the 15-minute time frame. Sorry, I can't mark it out. So it was literally a perfect double bottom left behind for the TP, and I was targeting this low point. I was targeting this liquid region as my final target point, and basically, end of the story. This is all I used for this trade. 10 criterias. I just removed 50% of the whole lot size at 50% on the whole position. So somewhere around here, I removed 5 at 5:1 ratio. I removed 50% of my whole lot size. Then it just simply blew through my TP with one inefficient push. After taking this parasol, it just literally did hit my TP in 1 minute with this 1 minute candle. And yeah, I just do 1 to 10 risk reward ratio overall on this trade. So once again, it had 10 criteria. It was a pretty clean and pretty nice trade, considering all of the criteria, considering the 15-minute time frame, considering the 15-minute trend, liquidity sweep, and everything. And that's why I always say that everything is getting moved by liquidity. You see, I marked this zone out. I marked this zone out in the markups, right? I said that the rejection and the confirmation can happen here, but there's a higher chance that price will come up to this higher supply region, to this extreme supply region here. But in reality, what has happened? Price just simply swept this liquidity out with a huge wick closing inside of this supply, reversed down, created a 5-minute zone break. 5-minute opposite sided zone was broken, so it's even stronger than a 1-minute change of character. Perfect 10 criteria entry opportunity has been formed, and liquidity is here on the downside. It could have been targeted, and that's why I always say that everything is getting moved by liquidity, because liquidity has been swept out, which indicated a nice reversal in the market and the continuation of the pro order flow. After this one, the liquidity has been targeted, and right after a liquidity targeting, price just see how it reacted. Just take a look at how it reacted. Swept out the liquidity with these huge wicks, then it reversed to the upside immediately. Everything is getting moved by and controlled by liquidity. And if you can't recognize the liquidity, you will be the liquidity yourself. And basically, that's the end of the story. It was a pretty nice, pretty clean trade. And lots of you guys, I mean, like 20 of you guys took this trade and executed this trade. And I'm really proud for you. I'm really proud of you because it was a pretty nice opportunity. And the fact that lots of you guys, more than 20 of you guys, recognized this and executed this opportunity tells me something, shows me something, that this whole thing is working. It's perfect because we all see the same thing. We all execute the same thing at the same time as a team, and we are all eating on this whole movement. And basically, it's happening in the previous month. And of course, you guys are doing an awesome job by doing all of these trades and executing all of these trades. I'm pretty proud of you. Actually, with this trade, 2 other students has passed phase 1 with a challenge. And yeah, you guys are just simply passing challenges, getting funded, receiving payouts, doing these awesome trades. I'm really, really proud of you. So once again, congratulations to everyone who took this trade. I'm really, really proud of you. And yeah, period. That's the end of the story. That's the end of this trade recap. See you guys.